show live. We are in the midst of a big spike, and I wanted to come on and say hi, let you know how I'm doing. Yes, I did lose money on this spike. I want to show you what happened to my position, what I did about it. I'm not totally satisfied with how I played it, but you can be the judge. Also want to come on and talk about FGen, which just made a big move. I don't have a position on there now, but let's play a little what if and see, what my position, how I would have fared with the position I had on if I'd kept it on. And let's look at some other issues. I want to talk about some questions that came on, viewer questions that I have from the last video, and respond to those. And I welcome your questions. I will be pulling up the chat here so I can take a look at your questions as we go forward. I don't know, it's a weird time of day, so maybe nobody's really on right now, but let's check it out. All right, so there's some of that music in the background. And yeah, so here we are. Like I said, it's kind of like late at night, so I doubt that there are a lot of people in the chat right now. But if you are, welcome. And here we are. It is a Thursday night, and let's pull up. Once again, I'm operating still with one monitor, so be patient with me for 1 second as I pull things up here, and we're going to go to the chart here as we move forward. So let's go to the chart. Here we go. Boom. And we'll pull up the charts. Okay, so we've had a big vol spike. UVXY got up to 45 today. And we ripped off, I guess we were around the $30 range when this rip began a few days ago. So if we look at the price action here, coming into the week, today is the 9th, and today's Thursday, so 8th would be Wednesday, 7th would be Tuesday. I'm sorry. Today's, yeah. Anyway, so here we are, and it's basically out of the weekend. We got this rip upward. We saw a little action on the first and second, and then boom, the rip. So I did talk about having I was short UVXY. I was long the 32.30 put spread, which is now, $15 out of the money, which is bad news for my position, certainly. The good news is that I still have a long time until expiration, so I can kind of hang in there. Let's take a look at how long we have here till expiration. So I have 43 days left till expiration with my position. So what did I do? I tried to stay calm. What I would have liked to have done is just gotten out of the position like before this happened. But you do get these rips. It's not a surprise to me that we were ripped up. And so what did I do? Well, on the Monday, I believe, when we got up to around 35, 36, right around that range, I actually got completely out of my position, and I rolled up. So instead of being long the 32.30 put spread, I got out of that position and I bought the 35.33 put spread. So I essentially rolled my position up $3, okay? And it went from being a situation where, well, if UVXY is 30 or below on expiration, I make the maximum too. Now, if UVXY is 33 or below on expiration, I make the maximum. And that seems like if you were just looking at this as a regular stock, you would be like, oh, wow, that's very unlikely that this is going to come back down. But this isn't a regular stock. It's UVXY, and this spike will subside at some point, and we will see 30 again in this soon. I don't know how soon, but soon. All that being said, yeah, it's not fun to have something spike against you, but I'm happy that I still have 43 days, and I don't believe at this point this spike will last 43 days. And I do think that this is a sale up here. I think it will go lower from here pretty rapidly. You go online and you look at StockTwits after having that rip against you, and you've got all these people on there just trying. It feels like everybody's trying to rub your nose in it, because everybody's on StockTwits is saying like, "Oh, see that shorts? Not so easy to make money after all, huh?" And just malicious comments from people that are along like who are really happy that the shorts are losing money and all this stuff. And it's funny because I try not to be that way myself. If I'm making money, I don't rub it in other people's faces, and when things go my way, I don't say that like the other side are idiots, because it's not really long versus shorts in this game. It's you versus yourself to try to figure out how to make money. And you might be long at one moment, you might be short at one moment, but it's really, I really see myself as a trader as either me versus myself, or it's me versus the rest of the world, in a sense. And just because somebody else happens to be short today when I'm short, it doesn't necessarily mean that we're on the same team or something. Just because we're kind of rooting, we would make money if we would both make money if the same particular thing happened. It doesn't mean that we're both on the same quote unquote team. So it's and like I said, although I did lose money on this move, it wasn't unexpected to me. I know that there are going to be spikes, and it can be kind of instructive if you were to watch the video I made right before this spike, to see how that video fares now. I know there's a lot of people on StockTwits, I think, who would really not want you to see what they posted yesterday, because it'll be stuff like them guaranteeing their victory of stock doing X, Y, or Z. And, if they're right, then they'll reference that. But if they're wrong, they just end up looking like idiots. For me, I can definitely cop to an idiotic move this week. I was looking in the comments on Facebook, and I didn't verify something, and I posted about it on Twitter, and it turned out not to be true. And so, for somebody who's trying to build himself as a source of information for people, if I'm posting something that's not true, it's a little embarrassing to me. But people make mistakes. I made a mistake on talking about this one thing on Twitter, and I copped to it, and I'll make mistakes again too, but that's the way it is, and you move on. Let's talk for a second about FGen. Now, FGen is one of the candidates for stocks for my calendar spread thing that I've been talking about, where I buy a farther out month at a low volatility, and I sell a closer month at a much higher volatility. And FGen, we've been waiting some event. Now, we didn't get necessarily the event we were waiting for. We did get earnings, which we knew was going to happen. And we did get the rip after earnings today after the close, and we'll have to wait till it opens, because FGen is one of these issues that really kind of has no liquidity before and after the market. It never has much liquidity, but it seldom trades much outside of market hours. It's kind of unique in that way, and the markets are usually really, really wide after hours. Like, nobody's really willing to make a market. I did have a position on where on the 50 strike I was long the SEP 50 puts and short the Feb 50 puts, and I started building a position. And I think I averaged $1.09. I paid $1.19 for the SEP, June 50 put spread. And how did that fare? Well, it's going to depend on where we open with the stock tomorrow, because although it did trade in a range after earnings between 50 and 31. 50 and 31.21 was the low, and it did sort of go out around 38.80, but that doesn't mean that anyone will be able to buy or sell stock paying 38.80 tomorrow on the open. So we'll have to see where it opens on the open. But in general, it looked as my position would have done better if we had if it had rallied back to like 54 or something and just sat there. Obviously, if you are short the 50 strike, it would be best if it just sat around 50. So I think the position probably would have been kind of break even-ish around 38.80, maybe a small winner, but we'll have to wait and see where the stock opens. I have followed the spread, and it is traded. Once I paid $1, like we said, something between like 115 and 125 for this spread. It did trade up to around like 180 to like $2. It's trading around $2. Well, it wasn't trading around $2. It was being marked at a midpoint around $2. But there was no liquidity to trade it at all. So that was the big problem with this particular issue, is less liquid than others. And when I looked at the spread recently, it still has just been hanging around $1.45. So not a really lucrative trade. It's the kind of thing where like the lack of liquidity is really the defining factor in this, because when I did eventually get out of the trade, you're going to have to pay like 20 to 30 cents in edge to get out of the trade. So if the midpoint is $2, you're going to have to sell this thing at like 175, maybe 165 to get out of it. If you wanted to buy some when the midpoint's $2, you may have to pay 225, 230. And when you've got that kind of a spread to deal with between buying and selling, it really cuts heavily into your profitability. Now, you might get lucky and catch somebody who is willing to trade mid-market maybe when you're getting into it, but you can't count on any liquidity in this thing, and that makes it really, really tough to trade. So how did we fare as far as the term structure? Because, we always talk about the term structure. The term structure was helping us out a lot to the upside, and it certainly dampened the effects of this to the upside at one point. Let's see. I'm just reading somebody. I'm reading Dr. Duru here. Hey, Doc. What's going on, buddy? Nice to see you on there. Hey, Dave. I watched your VIX video describing fade with puts. I wrote about that show and said how I was going to switch from buying UVXY calls to playing abrupt dissociations like this week. Nice. Yeah. I mean, I like the idea of selling out of the money puts as a way of fading a down move in the VIX. Once you get to a lower level, sell some out of the money puts. Or if you're long put spreads and it starts to go your way, as opposed to just taking off the put spreads, maybe sell some out of the money put spreads against your long sort of at the money or in the money put spreads as a way of flattening out your delta. I like that idea. Anyways, love Dr. Duru. I check him out and his content, and thanks for watching. So the term structure, well, it went from being largely and very heavily in contango, of course, to just the shock where it was kind of flatline, which is what you're looking at right now, is sort of this flatlining thing. Now, we are off the highs on the VIX. With the VIX around 19, you see this sort of flat structure where it just doesn't really know what to do with itself. But when we did get the VIX up to like really gunning up to like, I don't know if it got to 24. Let's take a look. But when it got more above 20, not get to 23.38, but when it got to like 21, 22, you did see us really head into that more backwardation structure where you had the front month and then the second month, and things really pointing as a downward sloping line. But as we've come off the highs, it's kind of back into a flat term structure. Now, all this stuff is happening so quickly, and the term structure really, the effects of backwardation or contango are kind of thrown out the window at the moment, because the actual movement of the VIX is going to be what defines the pricing at this moment. How far it moves, how far the VIX moves UVXY, you can get clues to that by looking at the term structure. When we are in, like, for example, if you look at the term structure and we're in backwardation, then a further move up in the VIX is really going to make UVXY get up and run. However, if you look at the term structure and we're heavily in contango, an up move in UVXY, an up move in the VIX is going to not really cause UVXY to do that much, because the term structure has to kind of catch up to the movement in the VIX. And when we're heavily in contango, the term structure kind of acts as a shock absorber, and you don't really get as much of a move in UVXY as that 1.5 times leverage that it says in the prospectus. But once you've had a couple days of the VIX spiking and you're in that backwardation shape that we had with the VIX around like 22, then further moves to the upside really do make UVXY get up and gallop upward. Conversely, on the downside, now that we are flat in the term structure, down moves are not going to make UVXY go quickly lower as much as they would have when we were in steep contango. When we're in steep contango, it almost like has no choice but to move lower when the VIX goes lower, because the futures are so far away from the actual spot price, and it just becomes ridiculous to the point where it has to move lower. So, when put together a couple days of spiking and the benefits of having the term structure as far as making UVXY kind of sluggish to the upside, they evaporate. And once you get up to that like 22 level we saw in the VIX, further moves to the upside are really going to make UVXY get up and go. And we saw it just pop up $4 to 45 today, 45 and the change, when we saw that further spiking of the VIX. Now, what from here? Where do we go from here? Well, if I knew that, I probably wouldn't be sitting in front of a computer talking to you at 9 at night. I would be, dead in a dumpster somewhere with a big smile on my face. But that all being said, my best guess is I don't know. We'll have to wait and see. It kind of feels like that if the market bounces off of here, that we could quickly go back to a 13 level, but you just really don't know. If we do back up a little bit and we look at the VIX over the last year, we can see some big moves where it gyrated back and forth a lot. So you can see, for example, this period, you look at the period after December where it's kind of going down, and that seems like a steady down move. But look at this period in the last quarter of last year. I mean, this thing is just, it really is making some big moves. It's gyrating moves here. We've got the VIX from like 16 and change, boom, up to 28, boom, back down to below 16, boom, back to 28, and we had these gyrating moves. And we could definitely see that kind of price action again. So it feels like the most likely thing is that we cruise back downward. And of course that would help my position, but we could definitely see this gyrating action that we had towards the end of last year. It's weird because people try to explain away why things happen. And, on one day in the market, the president can say something about China and the market can just totally shake it off. And some other day, the same scenario, seemingly same scenario, and stuff spikes. One day somebody can shoot missiles into a country and the market cannot care at all. And some other day, you can come in on a Sunday night and things have really, really just popped. It almost seemed like an indicator to me when we got that. There was an article that I posted on the Facebook group where it was saying, I think either hedge funds or market maker firms are betting heavily shorting the VIX. And, you get an article like that, and it seems like that's going to be the bottom in the VIX as soon as you get an article saying hedge funds are doing this, because it seems like anything hedge funds do kind of that they report about sort of blows up in their face. And I know that's not true, and it just is kind of seemingly that way, but it's just kind of funny. However, once again, if you were just to take things from a very simple viewpoint of VIX got low, VIX 13, that seems low to me. I'm not, either A, not going to short here, or B, I'm going to actually get long in an intelligent way. It worked out for you here, and it kind of made sense. It's like, well, we've gotten almost down to the level that we spent most of 2017 in. It's really kind of low here. Maybe it's not a good time to short this, A, or B. I'm going to get long somehow. I know it's going to cost me decay, but I'm going to get long and hang out and pay that decay for a little while because I think we're going to get a pop. And boy, we just got a huge pop. This is a huge move here. I know it kind of is dwarfed by the action we had in December. However, we really didn't move that much lower in the major indices, and we got this huge pop in the VIX. And it kind of seems like, a bunch of people were short this, and when things started to turn around, there wasn't a whole lot of liquidity. There weren't a whole lot of sellers to be on the offer here at some of these levels, and we got the top popped off of things. And I would suspect a lot of people got hurt here who had been shorting this for a while. People saw this big down move in the VIX, and it seemed like, the game is back on, and here comes the easy money again. And it looks like, the lid got blown off of this thing pretty big here. Now, like I said, we had the Vomageddon, and we had that big move in December that kind of dwarfed this. But if you took those moves, if you put those aside for a second, this is a pretty big, dramatic move here from 12. I mean, the VIX is essentially almost doubled from it did get below 12 there for a little bit in April. There's a little blip slightly below 12, but definitely got to 12 and almost got to 24. That's almost a double. That's a big move right there. That's a big, violent move that we've just experienced. And the question is kind of why, and also the question is how can we learn from this to be able to play it, and what is the play moving forward? Right now, as we speak, E-mini's up 850. The last couple nights of the overnight shift, stuff seemed to be down all the time, and we don't know if this will stay up, but a big move here. And my hope is that people who have been trading the short side have gotten a little smarter from all these big rip-ups and didn't, have all their eggs in one basket here, or they are playing long enough term that they can sort of weather this and move forward. It seems it's kind of like that the interview I had with Jay Wahlberg, where you get in the situation where contango, it seemed like the perfect term structure the last couple weeks, like 7%. Contango, it seemed like it was like, it was set up for the perfect vol short, and everything just seems set up. And it seems like every time it just seems like this perfect setup, something happens to upset the apple cart. But one thing I do want to emphasize to people is that we are in a spike, and so if you are committed to the short vol trade, you do want to be putting on a short or adding, starting a short or adding to a short at these higher levels, with the intention of riding it down from here. That's certainly something I'm looking at. Like right now, I'm looking at September really as a month that I'm interested in, like a UVXY, and I'm looking for us to optimistically retrace the lows, by September, and I'm looking at something like the September 32.29 put spread, something like that. If we look at the 32.29 put spread in September right now, you could potentially, more than double your money if we reach the lows again. Now, we don't know what's going to happen, and another way you might want to play it is pick some higher strikes, and then if we do get a move down, you can sell some out-of-the-money strikes against it. We did definitely see, though, I'm happy for the Volmageddon because it allowed me to imagine that we could get a spike. Now, if you just gone out there and sold naked calls in UVXY in the last couple weeks, you could have got your head ripped off on this move here. Those who might have thought that, like, looking at May with a week to go, those who might have thought that, like, the May 35 calls or the May 37 calls were easy money and you dump a bunch of those calls in there, you would have got your head ripped off. By using call verticals or put verticals, at least we limit our losses to a certain range. So the other big lesson for this spike for me personally is to practice what I preach, which is you should always have bullets, because how much would you love to have cash on the sides and bullets when you see that 45 handle in UVXY and you can come in, it's ripping, it's already been a spike, and you can come in and say, let's buy some 40 of the 43 puts during the day and try to leg into like a 43.40 put vertical, or let's sell some of these, a few week out 45, 47 call spreads. Like, let's look at like maybe 31 May, and let's sell some of the 45, 45.50 call spread, let's say. And if if you got all your eggs in one basket and you've just, either you're just straight up short UVXY or VXXB, or you've put everything into a selling a certain call spread or something, you don't have those bullets when we get this is a huge opportunity right now for a volatility trader, huge opportunity. And if you are handcuffed because your whole, all of your buying power is already in some puts, or you've sold some calls and now all of your capital is being eaten up by having to have buying power to protect those short calls, then you're handcuffed and you can't participate in this awesome price action right now. So, once again, having cash always on the side is such a powerful thing in trading, because when the opportunity comes, like it came here, this is opportunity right now to make money. You can make money on the short side, on the long side, or on the long side, but it's hard to make money if either you've already committed all your capital to some play, or you've burned up your capital because you've had such big losses because you've made such a big bet that you can't trade the next day. The key is to live to trade another day. So, in all likelihood, we could just go right back down and hit the lows again. Now, we also could go higher from here. The likelihood of us going a lot higher from here, I think, isn't that great, but it certainly could happen. Anything can happen in the market at any time. So, you want to always have bullets left to take advantage if we continue to surprise you to go in a way that you didn't expect to happen. We should all have a plan. What's your plan if UVXY is 55 tomorrow? Do you have a plan? What's your plan if UVXY is 35 tomorrow? You should have a plan in mind ahead of time, so that when that happens, you just say, "Oh, okay, that's my plan. Here I go. Here goes. Boom, boom." It shouldn't be an emotional thing. We don't want to be emotional about this stuff, because if you're emotional about it, you're betting too much. It's just the way it is. Because when you're emotional, you're not gonna make smart decisions. You don't want to just go out there and do something because you're like, "Oh my gosh, I can't believe it. Oh my gosh," and and just lose a ton of money. That's not what we want to happen. And maybe if you're new to this stuff, maybe you just sit on the side and you watch this progress. You watch what happens over the next couple weeks with this spike, and you take notes. You learn from it for next time. That's a great idea too. So let's look back to the chat for a second. I kind of got off on a tangent. I'm really excited. It's the end. I don't know if you guys are Game of Thrones fans. I know some of you have to be Game of Thrones fans. And only 2 episodes left. It seems so much like people are just... It's like when you know that somebody is moving away, you detach from them. People are detaching from the show. They're like, oh, this show sucks. Sorry, I never liked it. And they're very harsh on it right now. But it's sad. Let's see. Brilliant Wireless, thank you for coming on and all your comments and positivity. Backwardation works against UVXY put buyers, but it's temporary. Less trouble if you buy when the VIX reaches pretty extreme levels. Yes, I think that backwardation only happens, let's remember, like 20% of the time. So usually when we're in backwardation, that's a signal to you we're in a spike. And a spike generally means that we're going to go lower quickly at some point soon. And usually that act of going lower quickly is going to way overpower the effects of backwardation. Let's see. We don't know how the political economic forces will combine tomorrow or next week exactly. For me, things click when you describe the mean reverting nature of volatility and effects of term structure. Pay attention to VVIX too. Yes, let's talk about our friend VVIX. And I was looking at VVIX yesterday when it was up a significant amount yesterday, and I saw that move on it. Now, we don't, 100 is just a number, and I know it's significant in a way. It's like, oh, 100, it must be an important spot. And people will say, oh, VVIX over 100 is important, but 100 is just a number. The only reason that 100, the reason why 100 is important? It's just the stupidest reason ever. It's because we have 10 fingers. The digits are based in tens because humans have 10 fingers. If we had 9 fingers, then 90 would be important, or whatever. So 100 is just a number. However, VVIX, let's go over VVIX once again. VVIX is going to tell you about the order flow in the options for the VIX, okay? The VIX, you can't trade the VIX, right? We know that. You can trade futures on the VIX. If we look at futures on the VIX, each future has options attached to it. That says this future has no options right after I say that. But I don't know why it says that. But each future does have options associated with it. I have to pull them up in a different way, though. So here's options for each month. And the order flow in these options is going to determine the VVIX. If you've got buyers in these options, the VVIX is going to go higher. If you've got sellers in these options, VVIX is going to go lower. So generally, if people are getting nervous about the VIX, they'll come in and buy options, and VVIX will move higher. I like to say that it's important to see exactly what options are trading in the VIX, because a lot of times this is affected by a very big options trade. It's different if people are buying out of the money calls. That's different play than if people are doing like some huge 1x2 or something. So out of the money call buyers would, to me, be more significant as saying people think we're going to get a spike as far as the VVIX than some strange spread where people are trying to, do some sort of zero cost spread where they're financing buying this call by selling this out of the money call, and they're trying to pick somewhere in the middle. That would be less significant to me. You can look either at time and sales for the VIX. A better way probably than just looking at time and sales. This is going to show, okay, well, May 14 puts, 33,000 traded. now you see June 26th call, and you see, oh, well, actually almost exactly half of the hugest trade of the day in the puts was in these calls. So probably related. It would also help if you look to the side and it said spread, and you see, well, they didn't happen at the same time of day. So we can investigate that more. And in fact, it looks like that time of the day, May 1822, it looks like it was a different spread, maybe the May 1822 spread. So this is June calls and May puts. However, the fact that they're in a almost exactly 1-by-2 ratio makes me slightly suspicious that this is related. These trades are related to each other. A really also awesome place to look at time and sales for this stuff is to go to barchart.com. Let's take a look at that really quick here for a second. Barchart.com does have a listing of the top trades in for the day in a lot of issues. Let me see if I can find it here. So barchart.com, and then if you go to options, most active options, and then if you go to ETFs, then you can find, I think it's fixed in ETFs. I'm not, maybe it's in indices. Yeah, here we go. SIBO Volatility Index. I think this is where it is. Maybe it is in ETFs. But there's a spot on here where you can find the big VIX trades. Another thing to look at also is the trades actually in the SPX. But let's take a look here. Let me see if I can find. So this is obviously VXX and UVXY. That's not actually VIX. Let's see. I guess it should be under futures trades, maybe. Futures. Anyways, I don't want to waste your time on this. I'll research this and find out where to point to you for VIX, most active VIX options, which is going to give you an idea of time and sales for the VIX here. Now, remember, people can go in. They can go in and they can trade this stuff in VIX options if they want. They could go in and trade UVXY options. They probably wouldn't if they were sized because there's not as much liquidity and the spreads are wider. They could go into VXX. It's all going to do the same thing in the end. I put this picture on the thumbnail. This is the P-Coast Options Exchange, what it looks like now. It's kind of sad because this is where a lot of us first started trading. It's being torn down. So somebody in the PSE group posted this, and this is a place of fond memories for many of us, and that's what it looks like now. It's just this big empty room where the P-Coast used to be. And it's kind of the end of an era for some of us who traded options back in there so long ago. Well, for me, it was a while ago. I was there in 95, so that was a while ago. And a lot of memories coming out of that room in San Francisco way back when. All right, so let's try to come to some conclusions and some ideas for the VIX here tonight. Just to put it in the most basic terms, I believe we're in a spike. I think that we will get out of this and we will move lower, and there's an opportunity to sell here. I don't know if it will end tomorrow or next week, but I think that it doesn't seem like there's a huge fundamental reason for this spike right this moment. I feel like maybe too many people kind of got short this at one point, and there was a kind of a lack of really people willing to sell this at different levels as it went higher, and thus we got the rip. But I think that people will sort of come to their senses, and we will find more people who are willing to sell some vol at the levels that we're at now, and we will. And but more importantly, that just the indices will bounce off of their point. You know, we're in a derivative product. We're derived out of the indices here, and so if we look, here we have the E-minis, but a lot of these have kind of the same chart. We're not far off the highs, and we've had a little pullback here. You know, it did rip down and then kind of pop back up at some point yesterday, but if we if we move sideways or continue higher, we're going to get the vol is going to come in. The only way that the vol will go higher is if we do move lower from here in the indices. And I have no way of predicting the future. I don't know what's going to happen, but it just seems like there's nothing hugely fundamentally has changed in the last couple days, it seems to me. Now, like I said, I'm not going to tell you I know which way the market's going. I don't. So we'll have to wait and see from here. But I am maintaining my short in UVXY, and if we do get another rip up to like 45 or something like that, I will add more to it. And that's where we are. I congratulate those of you who have made some good money on this. I did see people when we were around 45 in UVXY saying, I'm going to buy calls here. I'm really going to make it now. And it is a very dangerous thing when you're, when you're in a day or two into a spike and things are ripping higher and higher. It's a dangerous thing once you've already had a move of a doubling of the VIX from 12 range almost up to like 24 range to then jump in and buy calls in UVXY once you've had this huge up move. That is a very dangerous thing to do. So I definitely would not necessarily do that. I do commend the people who did buy calls when we were around 13. It's not something I would have done, but it makes definitely much more sense to me than, coming in tomorrow, seeing the market down. We come in tomorrow, market's down a little bit, to then jump in and buy out of the money calls in UVXY is a very aggressive thing, and it really could go in your face pretty quickly. So I don't know if I would do that. But there you have it. That's my sort of ideas on that stuff. So I hope people have made money. I hope people didn't get run over. Like I said, I got run over a little bit on this, but that was kind of to be expected because, I'm short the VIX and it popped. However, all my eggs aren't in one basket. I have bullets, and I will survive this one. And I did buy the dip a little bit with some of my 401k stuff. I bought some TQQQ, and we'll see how that works out. All right, so thanks for watching, folks. Keep up with the questions and comments. I appreciate all of that. I didn't see some of the questions from the last video until it was too late. I know somebody asked me, well, are market makers really manipulating things? And the answer is, it's very hard to get in there and manipulate things. There are spots on a very illiquid issue where there's a little pocket here or there where something could be moved a little bit. But, the danger of trying to manipulate something is that you just run into a brick wall. You're like, oh, okay, well, there's that pocket here. Let's buy some stuff and get the ball rolling, put some bids in below so it looks like there's a lot of buyers. But all of a sudden you can run into like Goldman Sachs or something that's like, I'm on the offer, and you're like, okay, buy 10,000. And they're like, we're on the offer, and you just get run over. And, there's no market maker that's so big that they can't run into a brick wall like that. So, it's very hard to really manipulate things. I know people feel like market makers are manipulating things. And in a sense, markets will widen out. There is a lack of liquidity in many of these issues, and markets will widen out. And market makers, you can make money if markets are wider. It's easier to make money if when you have people hitting the bid or paying the offer. And certainly they can make money that way. But as far as like being able to like, be this puppet master, it's not really happening on the market maker level. For us as market makers, we're always saying, well, those guys upstairs are controlling everything. Retail's looking at us and saying we're controlling everything, and it's really, nobody really knows what's going to happen. So thinking in your mind that like, oh, these other people know what's going to happen, or if I study enough books and learn enough about trading, I'll be one of those people who knows what's going to happen. Nobody knows what's going to happen, folks. It's not knowable. And, the sooner you accept that, the better off you're going to be. And beautiful. I want to recommend a channel. I watched this Game of Thrones channel. It's called Fill the Issues Guy. Hilarious. He should have more. You see these people and you say they should have more subscribers. There's tons of people who you say they should have less subscribers almost. But this Fill the Issues Guy is hilarious. Check out his channel on Game of Thrones. And please subscribe to my channel. Check me out. Have a dialogue with me in the comments. I want to hear from you. I like doing this stuff. I would love to get bigger as a channel. Support me on Patreon or talk to me on Twitter. Reach out to me. Let's make some money together. More than my channel growing or any of that stuff, I'd love to hear you make some money. I would love to hear that something I said resonated with you, gave you a smile, or helped you to be more profitable in your trading life or in your personal life, because I like to talk to people about their personal finances. My, big things are for people to, try to save money as best you can, be responsible, live below your means. I don't like scratch tickets and lotteries. I think that's a big waste of so many people's money. I hate seeing people waste their money on scratch tickets. It drives me absolutely crazy. I see it going around me all the time. Like we try to, some financial people, we're talking about, oh, how are you going to invest your money in these sophisticated ways when, the majority of America is just burning money on, cigarettes, booze, and scratch tickets. And that is really where we have so much ground, so much stuff that we can do to move everybody forward, is just on that basic of learning how to save money and live below your means. Those are the basic fundamentals that will get you ahead, folks. Congratulations if you're to the point where like you're able to save money every month and you're able to consider, trading the VIX or, having a portfolio and those things. I know so many, people take it for granted that like, oh yeah, everybody, has a decent job and is able to save X amount of money. And now it's just the question of which investments you're going to choose. Well, just getting to that point is such a hard thing for so many people. And, so I want to try to encourage you, if you're watching and you haven't, really been that successful at being able to save money, that you focus in on that. Focus in on getting your credit card debt down before you do any of this trading stuff. That's guaranteed money. If you have a credit card that's, charging 22% per month, paying that off is synthetically getting 22% on your money. So that is a guaranteed win for you, to pay off that credit card first. I know there's some of you out here that I'm talking to right now who are trading and have these big credit card debts. And it's like, dude, pay that off first. That's what the smart money will do. I know it's not fun. It's more fun to think about trading and all this stuff, but pay off your credit cards first. This is the path to real wealth. It's not about having fun. This is deadly serious stuff, folks. It's about you and your family and your family's future. So take it seriously, and we can hopefully grow together. All right, so I will see you in the next one. Thanks for watching. I do hope to have my 2 screens set up back by then so that it's not so much juggling, and we will see you again then. I'm going to go out with some more Game of Thrones music because I'm still obsessed with that show as we come into the last 2 episodes of Game of Thrones forever. And so here's the outro of Game of Thrones stuff.